SIRI experienced a short squeeze recently, experiencing a 100% increase from June 20th to July 20th. The only reason I had SIRI in a separate investment portfolio is because the sell buy algorithm on my Intrendias website successfully considered SIRI stock a buy back in March. This is Intrendias. Welcome back to the channel. Let's dive straight into the technical analysis coverage. The short squeeze rips through three previous support and resistance levels as the stock rises exponentially. The moral of the story here is if you see a stock rising at an exponential curve like this that we see in yellow, that is a good sign to get out. Sell and enjoy if you were in early, but don't join the party at the top. We see the price crash down to the midpoint with the MACD bearish cross and confirmation with the two SMA lines. The stock can continue downwards as we review their latest quarter results. Revenue is down while costs are rising 1 and 2% respectively. We can see management cutting back spending on sales and marketing, which reinstates that we are in a tight economy. Advertising activities usually goes down in times like this. However, we're seeing a 21% and 17% increase in cost for administrative and engineering design and development, respectively. This can also signal a choosy labor market where it is difficult for companies to find workers and talent, where the worker has bargaining power, or SIRI is outreaching out to consultants. Here we see the year-over-year percent change by record, painting the same picture that revenues are down and costs are up. Monthly activity users are down 6% year over year for Pandora, while radio is up 17% in promotional subs. Sirius XM brings in 3 times more revenue than Pandora, so radio is still the core of their business, so it's great to see their large revenue source increase in participation. However, for Siri to compete in a smartphone app-oriented environment, they will need Pandora to become more mainstream. Sirius XM pricing is similar compared to the competition, with the basic plan that is not free is $10.99 per month. Sirius XM also does have a free version. For Pandora, besides the free plan, there is a $4.99 option, but you are dealing with stations here instead of individual music. Free personalized music is in the $9.99 option. Spotify individual plan is $10.99. There is a duo and family plan also. Both Pandora and Spotify have student options, and Spotify has that leg up with the Hulu partnership, providing college students not only music, but also Hulu access. And just with personal stories, I do remember back when I was in college, students would always talk about how much they love their Spotify, and they get this bonus of also having Hulu. So you have college kids entertained, right? I personally never used Spotify nor Hulu for that matter. Quite frankly, I'm happy with my YouTube, and I piggyback off Disney Plus sometimes from friends. So that's my personal scenario, and that's my personal experience with that. Love to hear your thoughts on your user experience with Spotify or Siri down in the comments below. Spotify also makes up 30% of the music market share, with Apple, Tencent, and Amazon Music behind. All that being said, though, Spotify is still not profitable. Perhaps SPOT, Spotify stock, will be a future stock covered in another video. Ultimately, the lesson here is to exit a stock experiencing huge exponential price change when fundamentals have not changed. This has been Intrendias. You could check out the Intrendias buy-sell algorithm in the description below. If you enjoyed what you saw in this video today, hit the like button, subscribe, share with your friends, and I will see you in the next one.